Yep.
Yes.
Perfect. Well, I want to thank the opportunity, Brenda and Yvonne, to speak to your clients, potential clients, about insurance. I've been an insurance agency owner with farmers for 40 years from right out of college. And you're right to say insurance is really not very interesting until you need it. And then it becomes extremely interesting. And what I find is that people have one of their highest household budget items is their insurance line. And most of the time they have no idea what kind of coverage they have, what's covered, what's not covered, what am I paying for? I needed to get homeowners insurance when I bought my house and I needed it quick. And so I just went with this company. So what are the differences between companies? What is typically covered on homeowners insurance and what are options that you can purchase? So this will just be a high level overview. Feel free to jump in with questions. I don't know if that works with chat or whatever, but I'm more than happy to answer any questions you have. So let's just get started. My name is Terry. It's actually Teresa Sims, but I go by Terry. And I represent farmers, but I'm small business, right? So I am not employed by farmers. I represent farmers. So I'm a 1099. I'm a small business owner who affiliates myself with farmers. And the reason I chose farmers way back in the day is because actually my state farm agent was a good friend of mine. And he said, farmers has a better contract as an agent, because if the risk doesn't fit farmers, I can write it anywhere. So I have policies, I have policies with Travelers, Hartford, all kinds of other different companies. I don't have to say, oh, that doesn't fit. It's in an area we don't write, or it has too many claims, and just say, so sorry, see you later. I can pursue other options to obtain coverage for customers, which is very handy, especially if we've had a customer for a really long time and they have one kid that has a streak of accidents. We don't have to kiss them goodbye. We can just find a solution to them. All right, so let's just move right along here. I would hope by the end of our little chat tonight, you have a better idea of what is covered. And I'm just strictly sticking to homeowners insurance. We could do a deep dive on auto, umbrella insurance at another time, but I'm going to stick to the homeowners insurance for the purposes tonight. So on your basic policy, I bought a homeowners policy, the bank said I needed to have it. Okay, so what's covered? Usually, and every company is going to be slightly different. So the Department of Insurance will outline every company needs to carry these particular coverages, and then the companies can either add to those and beef up, or they can water down the coverages. And it's a contract. All it is a contract. And so when people say my contract with this company is $500 more than my contract with Fly By Night company over here, well, that's because at the time of the loss, there are clauses that limit coverage in some contracts as opposed to the other contract. And I am really proud to say that Farmers pays really well in their claims. And most people will say, well, you know, they're not the cheapest. And I'll say, I know, but they're the first ones to pay, and they don't try to nickel and dime you. And I can honestly tell you that in the 40 years I've been an agent, I've never been embarrassed by how they paid the claim. And that's also a tribute to my team, because we make sure you have the proper coverages. So even if you have a great contract with a great company, it would be easy to just say, oh, you don't need that, you don't need that, you don't need that, to get the price down. So we try to tailor the policy to what the customer needs. So most policies are going to cover fire damage, smoke damage. A lot of people question, well, what if it's in a wildfire zone? Yes, wildfire is not excluded under your policy. Explosions, the wind and hail, like today's winds, if that's gonna, we've had to have the wind pick up roofs in Huntington Beach, and yes, that is covered. On the rain entering your house is not covered. However, if any of these things that are covered happen first, like the wind picks up your roof or picks up a bunch of shingles off of your roof, and then the rain enters, then you will have coverage. Theft is covered on most, but not all policies. I'm giving the real good HO4, HO3, HO5 type of a policy. There are HO1s, which is just fire, smoke, vandalism. But most of them will cover theft, and the theft will follow you anywhere in the world. So we've had people get an expensive camera stolen off the back of their chair in a Paris cafe, and that was covered. So that's something a lot of people don't realize, that it will cover you anywhere. And your kid goes off to college and leaves their laptop in the car and a bunch of other expensive boots and things. Somebody does a smash and grab and empties out the stuff out of their car. That is covered under your homeowner's policy as well. Lightning, bursting pipes. So that's always interesting. The water damage thing is a big question. The deal with it is, on most policies, it has to be sudden and accidental. So any kind of a slow leak, no go, you're not going to get coverage for it. So oftentimes I'll have people say, I was remodeling my bath and I see that there's been a slow leak behind the toilet for a long time. I can tell because there's mold and mildew, and sorry, you're not going to get coverage for that. That should be normal household maintenance. But if you wake up in the morning and you step in 2 inches of water on your floor because your refrigerator line burst or your dishwasher blew up on you, there should be coverage under most policies. You're going to have coverage for that. Slab leaks are another one. Now, they oftentimes won't cover the actual pipe because that's wear and tear, but they'll cover the damage that happened as a result of that burst pipe. So again, that 2 inches of water, now we have to replace the cabinets, we have to replace the flooring, especially if it's wood floor, that should be covered. Falling objects, that's, believe it or not, we have airplanes that fall into houses, things like that. We have trees, especially in winds like this, that fall into houses. Liability claims, that's another big thing and we'll go into that in a little more detail. I'm getting sued. My neighbor's suing me because of this, that, or the other thing. The lady down the block is suing me. So some things are and are not covered. And we'll go in a little more detail on that. But even if you have, your best girlfriend over and she is helping you chop onions for dinner and she cuts herself, those are generally covered at least up to $500. So you can take them and get stitches and that kind of thing. If you want to cover these other items, you're going to need extra endorsements for it. Earthquake, any kind of earth movement, landslide. And so floods, this goes back to the water thing. Anytime you have rainwater rising and now it's coming in your sliding door or even entering through the window, unless one of the usually covered happens first, it's going to be considered flood, and then you would need flood insurance for it. So if a tree falls on the house, breaks the window, and water comes in, rainwater comes in, yes, covered. Does that make sense? I hope that makes sense. And of course, nothing intentional, nuclear hazards. So the damage from the birds, the rodents, and the insects is interesting. So on the bottom of the screen here, there's a picture of a roof with an animal has made a home in the roof. And if it was a rat or it was birds or mice or anything, it would be excluded. However, it was a possum, and a possum's not a rodent. And because it didn't fall under that category, it was a covered loss. So interesting sometimes. Wear and tear is never covered. Again, normal household maintenance, that's not ever going to be covered. Sewer backup, you purchase that as extra coverage. It's generally an endorsement if the toilet backs up and all that gunk comes in your house. And then mold is really hard to get coverage for, and it scares a lot of people. Sometimes there's rare occasions where mold will be covered. And the only time I've really had it covered was somebody went away for the weekend and a pipe burst and they had 6 inches of water in their house with a ring of mold around the top. So because it was second to that first claim, there was coverage there. So, and that's the bottom right picture is a mold picture. Interesting, right smack dab in the middle of the screen. This was an actual customer's house. They had moved out of state and they had rented their home here, and they were having a problem getting the person to pay their rent and to answer their calls. So when they came into town, they peeked in through the windows and saw this. And so they took pictures. This is the master bedroom, believe it or not, which they had turned into a pot farm. And extensive damage to the house was done. So they ended up taking these people to court, and we do not cover that somebody turning your house into a pot farm. That was something that they had to go to court, and obviously the judge ruled in their favor, and the owner of the pot farm just paid them off with $100 bills because they obviously it was a very lucrative business for them. But things like that can happen in rental properties, and it's not covered. I'm going to go on to the next screen and just talk about the different parts of your policy. So you've got a homeowner's policy, and we're going to go into each one of these. The first part covers the building, and then any separate structures like your garage, all of your personal property, your additional living expenses, and your liability. Okay, so first of all, when you're looking at coverage for your building, how much do you need? And this is probably the most important thing. And I'm always telling customers not to be penny wise and pound foolish is an old saying. Make sure you've got enough coverage. So if you're going to try to bring your premium down and your agent says you need $500,000 to rebuild your dwelling, don't say, how much would it be if I only took 400? I would rather have you say, okay, instead of a 5,000 deductible, what if I take a 10,000 deductible? And yeah, that's going to hurt a little bit in a claim because you're going to have to come up with a $5 higher deductible, but you're not going to be 100,000 underinsured. So really important to not nickel and dime on the replacement cost for the house, because costs, like everything else right now, keep going up. Actual cash value versus replacement cost coverage. So look at your policy. Again, this is a contract. So this policy says, yep, we're going to cover your house for $500,000. But at actual cash value, it's just going to depreciate the heck out of your final settlement amount. Versus replacement cost coverage. Oh, yeah, your TV is 20 years old. Well, it's going to cost you this much for a new similar TV. We'll pay this, instead of saying, well, forget it, this thing's not worth anything anymore. Every company has some form of extended replacement cost, which accounts for, oh, I put that room addition on and I forgot to tell you about that, or I made major upgrades to the kitchen and I forgot to tell you. So usually we'll go anywhere from 10 to 25, even 50% higher than that 500,000 you had on your building. In the event of a total loss, to help you pay for upgrades you may not have had time to mention to your insurance agent. All your attached structures get included in this. So if you have an attached garage, it's part of the dwelling. What does attached mean? Attached means whether it's a ceiling, even if it's like sometimes they have a carport that's attaching your garage, that's an attached garage. If it's to the house in any way like that any kind of a roof line, that's going to be covered as dwelling. And then when you do renovations and improvements, please tell your agent so that you can get that covered. So the replacement cost value. So a lot of people say, well, why the heck would it cost so much more to rebuild than new construction? And I'd like to just kind of give you an idea. Of course, if you're recreating one thing as opposed to 25 things when they're building a tract house, it's going to be more expensive to do a one-off. Obviously, that goes with anything. But then you also need experts to kind of plan and match the existing flooring or the existing design of the house. And that can be expensive, plus rebuilding things up to code. Well, now we can't have shake roofs anymore. We have to have fireproof roof. Well, only 25% of the house was destroyed in the fire. I'm not going to put 25% with a certain roof and not the rest. And so you should have coverage in your policy for building code upgrades. And that pays for the non-damaged portion of the house that needs to be brought up to code, because you're not going to do electric wiring that happens a lot. Well, I'm not going to rewire one room. I have to rewire the entire thing. And most policies will cover demolition and debris removal. And of course, new construction doesn't have to deal with that. So this is a quick example of what's actual cash value versus replacement cost. Okay, so you got a brand new house and 11 years later, you have a roof loss. So with the actual cash value, remember that is going to depreciate. So your cost of your new roof is the same, 15 grand. But when you take, $5,400 in depreciation and you take your $2,000 deductible, your final out-of-pocket expense is considerably higher than a policy that has replacement cost. And I think this is probably one of the big mistakes that a consumer makes when they compare policy to policy, and they call me up and they say, Terry, I can get this company for this price. Oftentimes it is an actual cash value policy, or it's just actual cash value on the roof. That's one of the latest things that companies are doing to keep their costs down. But you don't realize that until you have a claim. So know your company that you're going with, know their reputation, and take time to read the policy, or at least have an agent that you trust knows their policy. Okay, so the second section is separate structures, and that's your detached garage. Now that we have ADUs, oftentimes it's going to be the ADU. Sometimes we have to do a separate policy for the ADU if it's on its own electric and its own gas. There's certain requirements, but I have many that are just covered as a separate structure. You'll only get 10% of your building amount automatically. So that $500,000 home replacement is going to give me $50,000 for my detached garage. So here's a story. So we inherited a book of business from somebody who retired, and this agent wasn't very thorough. Anyhow, so we reached out to all of the clients and said, we'd like to review and make sure you've got everything you need. And we got a call from one of these people who we just couldn't reach. They never had time to do a review. And he was doing some work in his garage, and he was using a blowtorch, and he set it down and went to Home Depot to get something else that he needed. So not only did he burn down his own garage, which was his separate structure, he also burned down the neighbor's garage, which was nearby. And it was a smaller house kind of out in Chino area or someplace. He didn't have enough to rebuild his garage. So you need to make sure you have detached, even these nice expensive outdoor barbecues and those kinds of things, that you have coverage on your policy to rebuild it. Pools are interesting because people say nothing's going to happen to my pool, but you'd be surprised how many cars end up in pools. They come through walls, and they are damaged as a result. Trees fall on pools. So you want to make sure you've got enough. Separate structures coverage is not expensive. And then coverage C is your personal property, your contents. To tell people, if you pick up your house and you shake it, everything that falls out is your personal property. So everything that's not attached, your appliances that are attached to the wall, your cupboards, those aren't personal property. But everything in the kitchen drawers, all the small appliances, all your clothing, all your expensive shoes, sporting equipment, golf clubs, surfboards, bicycles, things like that are all personal property. Things that are target theft items are going to have this limits, this limitation on there, and every company has them, and they're different with every company. Even with our own company, they're different with different policy types. So for instance, typically you'll see cash will only be covered up to $100 or $200. So if your house burns down and you want to tell me that you had your mattress stuffed full of $100 bills, we're not going to pay the full amount. We're going to pay $100 or $200. Stamp collections, coin collections, things like that. The things that the burglar will take when he comes in is jewelry, silverware, cash, guns, gun collections, all of that. You want to have special coverage on, just an endorsement on your policy. Again, not expensive. Guns are like $3 per 1,000 of value, but if somebody breaks in, that's what they're going to take. I've been out to people's houses and they show me around, and this one lady had this most beautiful jewelry case that was her grandmother's, and she had her beautiful jewelry on display. And unfortunately, I'm thinking all that somebody has to do is grab a pillowcase, fill it up, and be out the door. So it's also good advice to not leave everything right there in plain view. When I talk about bikes, e-bikes are a little bit different. If you have these bikes that are powered by a motor, you may have an exclusion on your policy for it, so you want to check that. The importance of having an inventory. So if that there is a total loss, like with these wildfires that we have, people will say, well, what do I take? And I always say, take pictures. Take pictures of every room, open up the closets with all your Christmas boxes so we can see you have 20 Christmas boxes, not 2. Take pictures of your TV. And if you do it with a video, you can walk around and say, I bought this TV at Best Buy. It's a da-da-da model. I bought it in this year. I paid about that much. And you may never, ever have to use that, but email it to yourself. So in the event that there's ever any question about, did you have 5 TVs in your house when it burned down, or did you just have one? You'll have proof, and then it will make a claim sail right through. And then this is also a great coverage. Every policy will have additional living expenses, or they call it loss of use coverage sometimes. It will be for a varying amount depending upon the policy type. It'll either be for 12 up to 6 months. And this is what pays when they say there's a wildfire in this area and we are evacuating all these houses in this zip code. Those people, if they have a good insurance policy, don't need to go sleep on the gym floor. They should be able to reach out to their insurance agent. There is no deductible on this. There's no increased cost to your policy if you claim this, but it will give you money to get a hotel. It'll pay for your meals over and above what you typically would spend to cook for your family. They'll ask you, what is your regular household budget for a week? And you present the receipts for having to eat out 3 meals a day. They'll pay to board your animals. Any expenses that you're having to take over and above what it would cost you to live in your house is payable to you under the additional living expenses. So what we do in our office, when we hear that a zip code is being evacuated, I go through my database and find out everybody in that zip code, and we typically will text or call them and say, do you need help with this? Because I'm always amazed so many times when people don't know they have this coverage, and I don't want to find out after is that they had to go bunk in a friend's house or stay at their mother-in-law's or something they didn't really want to do when they have this coverage available to them. Now, personal liability is another area where you really don't want to skimp. You want to make sure you have enough liability, especially living in Southern California, because everybody likes to sue everybody here. And there's a lot of attorneys that are willing to take on cases. But also in the last few years, everybody's home has gone up in value so much that our net worth has gone up. So, if you maybe had $50,000 in equity in your home before, you could easily have $500,000 in equity 20 years later. And that's that much more that you are vulnerable to be sued for. Making sure you have proper liability coverage to cover your assets. And some people have second homes, they have other expensive property, or their net worth is substantial. Make sure you have enough liability on your home, and make sure you have an umbrella policy. That's one of my biggest messages to people. Basically, I call it lawsuit insurance. It protects you if somebody trips and falls down the stairs at your house. Anybody with a pool absolutely should have $1 million liability, because things happen. Even if they just hit their head on the pool wall. And also nowadays we have this personal injury exposure with cyber liability, because people will write things out of, without really thinking about it, they'll write things and they can end up being sued for discrimination, for libel, for slander. and we see it happen. So without proper personal liability coverage, if you don't know, what your family members are saying online, absolutely, it's a nice thing to know you have it. MedPay is that's that $500 we're going to pay for your friend who was cutting the onions. That will, no matter who's at fault, a lot of times that's a dog bite situation. The little kid next door came over to pet your dog, and your dog snapped at him, and they ended up getting 2 stitches in their hand or whatever. If we pay for that ER visit and give them a little extra money, it will typically keep it from becoming a lawsuit. So that's what MedPay is very nice to have. But I'm going to jump to umbrella policies. So I like this illustration because it kind of gives you an idea what an umbrella policy does. The umbrella goes over your home policy. So once your home policy, even if you had $1 million and you maxed it out and the neighbor kid fell in the pool, and even if you're away out of town and the neighbor kids climb the fence, use your pool without your knowledge, and you can still be sued. So if your underlying policy, your home or your auto, this gives an example of motorcycles and ATVs, if that gets maxed out, the company will pay it, then the umbrella policy goes in on top of it. So it's an added layer, and we go up to $10 million on umbrellas, and I have several people with $10 million umbrellas because they have that much to protect. And I do, this is my little grandson anyways. Quick side note here. So when it was dress up like a grown-up day in kindergarten last year, he told his parents are both teachers. He told them he wanted to be a farmer's agent. So I brought him in and got him all dressed up in all the farmer's gear. And yeah, he was so proud to be a farmer's agent. So, but I can't stress enough, you want to do annual policy reviews. And if your agency or your company isn't reaching out to you, you need to reach out to them, because things happen, things change. I got a new coverage probably 2 years ago, and it's called service line coverage. So everybody who comes to us now, I always put it on because it's a great coverage. If you have the gas company send you the little thing where for $5 more a month, they'll cover the gas line if it breaks between your house and the street. Well, the service line coverage covers all the lines. It covers the sewer line, it covers the cable, it covers the water, it covers your gas line, and it's like $60 for a year for them to get that kind of coverage. And that can be really expensive. So your homeowner's insurance is going to pay if the gas line breaks under the house, typically like a slab type of a thing, or just say a sewer pipe. And if it breaks under the street, the city's going to pay. But what we have happening, especially now that homes are getting to be about 50 years old around here, between the house and the street, there's a break in the line. And it's going to cost you $10,000 or $15,000 to dig up your driveway to get to where you can repair that line. So sewer line coverage came out years ago. If we weren't doing annual policy reviews, anybody who bought a policy 5 or 10 or 15 or 20 or 30 years ago wouldn't have it on there. So that's why we do reviews, because things change on our side, but then also things change on your side. As far as your home additions, upgrades, shake roofs used to have a surcharge. And if we didn't know that people had replaced their shake roofs, they'd be paying several $100s more a year than they needed to if they had replaced it with, a tile roof. So just to avoid any gaps in your own insurance, oftentimes people will come to us, even if they're with farmers and they have, they never got their occupation discounts. Like we give discounts for teachers and firefighters and things like that. And if the agent didn't know you had, or you got that you were eligible for that discount after you took out the policy, you want to get all your discounts. Oh, I'm going the wrong direction. There we go. And I said this a little bit in the beginning. Take a higher deductible, don't skimp on the building coverage. And probably nothing big will ever happen, but it can. And if it does, it can be financially devastating. And the higher deductible, it'll affect your pocketbook for, the next month or two. But being hundreds of thousands of dollars underinsured. And I actually, one of my very good farmers agent friends, you probably heard the story, Brenda, but he's an agent up in Paradise, California. And when they had those wildfires. It was 2018. He was actually at a conference with me, and then he raced home. His wife had evacuated the house, but he never got to go back into his house. And he had over 500 claims in the first 24 hours. Most of them were total losses, and it included his house, included his in-laws' house. But sometimes you just don't know. And he had a realtor friend who had referred him somebody, and at the end of the day, months later, that realtor called up and said, I referred so-and-so to you, but he didn't have enough coverage to rebuild his house. And my buddy Brad said, well, he didn't go with me. He went with another policy that was cheaper. Well, the reason it was cheaper is because he skimped on his building coverage amount. And so maybe he saved a couple $100 initially when he was buying the house, but you'd be far better off just to take a higher deductible. You can go up to a $50,000 deductible, but don't risk losing your house and not having enough money to rebuild it.
Nice. Yeah, thanks, Terry. That's actually.
Am I out of time?
No. Go ahead. Sorry, I'll leave my question to the end.
Okay, all right. I'm almost done. I just have a couple more slides here. This is also another thing when I talked about the umbrella insurance. So just to give you a real quick understanding of how the liability portion on your home, but also auto works. This actually happens to be an auto policy. The company is going to pay what their contract says they have to pay. So if you have 100,000 on your liability and your dog bites a little girl in the face, and now she's never going to be a fashion model, and they're going to sue you for $500,000 or $1 million, your homeowner's policy is going to pay as quick as they can that 100,000 that's on your contract with them, because otherwise they have to pay defense costs on top of it. So they pay, they close the file, and then you get a letter like this that says your loss is exceeding your coverages and you need to invest in an attorney to help you out with this. And the attorney, the first thing they're going to say is, do you have an umbrella policy? So the umbrella policy, if you have one in place, goes over once your contracted amount on your home or your auto policy pays, same thing with businesses, then the umbrella policy comes in. And this was crazy, $50 million one was. I think it got settled for about 6. But yeah, people are very quick to sue. And this is just one of my words to the wise. The cheapest insurance can oftentimes wind up being the most costly. And I just want to introduce you to my team here. So I have, we're celebrating our 40th year this year. Sylvia here, she's been with me for 20 years. She actually went to school with my daughter. When she started college, she came and worked here part-time, and now she's married with 2 kids, and she can run this office with her eyes closed. And Sylvia and Bria have each been here about 8 years. Let me see if I have. So Kate stayed home. She had 2 babies in a row. Irish twins, stayed home. And so she's working from home now. But yes, so we have 6 licensed staff members in addition to myself. We are old-fashioned. We answer the phone. We are here if you want to come in and visit us. We actually have one customer who comes in every Monday and brings us home-baked goods. So that's kind of nice. But I do like to just say we're old-fashioned. We don't say, oh, we'll call you back. We say, we'll answer the phone. We're here. We're working. We care about our customers. We care about making sure they have proper coverage, not just slapping a policy on because you need one. We want to make sure that you have the coverage that you need. And that's why we like to say we don't just sell the insurance, we protect families. So you are welcome to call me anytime. You can text or call the main line. Or if you want to call my personal cell phone, feel free to do that as well. Any questions that you might have about your insurance. And I'm also I'm not a hard pressure salesperson, as you can probably tell. If you have a better deal with where you are, and sometimes just depending upon, if you have tickets or accidents or whatever, I may recommend just stay where you are, which is a really, really good deal. But I can also make recommendations to take your umbrella up to 2 million instead of 1 million, or make sure you have an umbrella, or just take a look over what you do have. So we do homes and autos, and we do rental properties, and we do, I have apartments, houses with 300 units. So I'm actually part of the Apartment Association of Orange County too. So, and then we do small businesses. Did you have questions, Brenda?
She'll be right back.
Okay.
Over here for some reason.
So I don't know if anybody had any questions. Tammy has a hand raised.
Okay. Yeah,
Yes.
Tammy.
Yes. Hi, Terry. Terry, is there like a certain number of claim that you can have in a year before your insurance go up? Like how
Good question. Good question. Okay, so and that's where it is really nice to have an agent rather than a company that doesn't have a particular agent assigned to you, because we can take a look at your policy and say, maybe you don't want to turn this in. Maybe you want to, and depending upon how much it is, that's why I like people to take higher deductibles, take a 5,000 deductible, pick up all the little things yourself, because they look at frequency of claims. So if you have 3 claims that were thousands a piece, you're going to have a heck of a hard time trying to get insurance. And if you can get it, it's going to be darn expensive. If you have 1 claim that's $3,000, it's not a big deal. Typically, your policy is going to have a claims-free discount on it. And that's 25 to 30%. So you'll lose that, and you'll see your homeowner's policy go up 25 or 30%, but they won't take away your coverage. After 3 claims, I don't know of a company that will keep you insured. You'll get non-renewed, and then we'll have to seek out other options for you. And typically what we have to do is get a policy. We can even go to surplus lines, but it might not be an admitted carrier until the record clears up. So, and it can be very pricey.
And how long does it take for a record to clear up, Terry?
5 years. So 5 years, homeowners claims will stay on your record for 5 years.
Okay.
That's a good question. Terry, I wanted to also talk about the cost of home insurance going up, because that's a big thing. And I think, we do have some first-time buyers with us. And in order to keep their monthly payments down, they obviously want to go with the cheapest insurance, which understandably so. So thank you for bringing up the point that it can just increase the deductible. Like you say, even a $50,000 deductible would be better than, coming out of pocket hundreds of thousands of dollars. But what about just the cost of insurance? Because California, it seems like the entire state now we're in a fire zone.
I'll tell you, this year, 2023 is going to be crazy for insurance. We're already seeing it. We're already getting the heads up. And it's not just farmers, it's every company out there, and it has to do with some politics with the Department of Insurance, but also every company is paying more than they're bringing in. And I was at a meeting the other day, and they said our expense, we're paying $1.06 for every dollar we bring in, and you can't sustain that for long. Yet companies have investments that will supplement that when they have a bad year, but long term, it's not a viable business model. So they'll raise the rates accordingly. I would say to keep your rate as affordable as possible. First of all, the deductible thing is my number one go-to. Secondly, make sure you have your home and your auto and your life insurance, everything all together with one company, because the bundling discounts are significant. Our home and auto rate is 25% less if you bundle. So if you call me and you say, I want a homeowner's quote, and I say it's $2,000, but if we do your car insurance too, it's only $1,500. And I'm surprised sometimes at how many people say, oh, I went with this company because escrow just helped me with it, and I never moved my cars, or I love AAA, I don't want to leave them. But look at the whole thing as a package. And same thing with the umbrella, gives you another 5%. Earthquake insurance gives you another 5% off. Down in South County, like Mission Viejo, you can get earthquake insurance for $100. Believe it or not, they're built on like bedrock. But I have people who are making $300 a year on their insurance because they buy $100 earthquake policy and they get 5% off all their cars, 5% off their home. And yeah, so make sure you're looking at all the different bundling options. And then again, make sure if you have a 4-year degree or you're a teacher or you're a firefighter, make sure if the kind of occupation discounts, you're getting those as well, because oftentimes people don't remember to let us know when they achieve those things.
And I think another misconception people have is that they're stuck with their insurance company. They'll say, well, I just sent in my payment, so now I have to wait another year before I can switch.
And that's not the case. And I think a lot of them, if their insurance is impounded, it's in with your loan and the lender pays your insurance bill. No, 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 no. And if they slapped policy on there, my guess is it's probably not really good coverage. And again, you probably don't have the bundling discount. So you could get a good beefy policy from a good company by bringing all your insurance together with somebody who's knowledgeable and will look at the whole big picture for you. And yeah, there's no prepayment penalty or anything else. You can cancel. Some companies will short rate, but they're getting fewer and fewer now. So you can always check with your company, but get quotes. Find out if you're the best coverage for your money. So you're not surprised at the end of the day. Just that I was telling you before we started about my brother, he had a wild boar on this dead road out in the middle of nowhere going 70 miles an hour. And he had Tesla insurance actually, and we had just written him. But his coverage was so much better with us. I just said to him, I'm so glad you switched over, because he just paid it because he bought the car, and a lot of people do that with their homes. They buy the home, they tip the insurance through the lender, and they don't know what they don't know.
Yeah.
Thank you, Terry. That was great. That's great information to point out.
Do we have
Dana-
any other questions?
Yeah, Dana has one I see in the chat. So it's her question is it 3 claims for HOA master policies as well before they drop the building? Do you know that, Terry?
For HOA master, first of all, that's not a hard and fast rule. Okay, so that's what makes it very interesting and difficult to sit in my seat as an agency. It changes based upon what's happening with the company. So company to company, it's going to change. So if a company is profitable that year, they're not going to be so worried about having multiple claims. They'll overlook things. If a company is not having a profitable year, then they're looking to streamline their business and just keep the best business. And that's when they will start going through and saying, oh, these houses in this zip code are too close to the brush and we're going to surcharge them or we're going to non-renew them. And Farmers doesn't really non-renew much, but a lot of companies will do that on a regular basis, or they'll pull out of California altogether if they're small enough. So that's when they start trimming. They'll trim by brush fire proximity. They'll look at the claims. So whereas before, maybe you could take 3 claims and that would be acceptable. 3 claims for any policy in a 5-year period is going to be a tough sell. I'm just going to be completely honest with you. And it would depend on what they are for. I've fought though for some before, and if there's 3 claims, but the house has been completely replumbed and they were all, burst pipe things, we can usually soften the the underwriter's heart on that. But it depends. It's a case by case. But yeah, 3 claims is a no. It's really going to create a problem. So pick up the little things yourself. If it's something, even if you had a $5,000 deductible and it was a $6,000 loss, I oftentimes will tell people just, and I can't say don't turn in a claim. It's against my my contract, but I can say if it were me, I'll run it up and say, okay, you're going to lose your claims free discount and your rate's going to go to this. Now do you want to turn it in? And then they can make an educated decision. With Farmers, you've been with us for 6 years without a claim on your home policy. Your first claim is not going to raise your rate. So sometimes people will put that in. But again, make sure that it's enough of a value that it's worth it, because you may end up paying a lot more than that on your increased cost of insurance.
Thank you. Elizabeth Hernandez made a comment. She said, I love my umbrella policy, a lot of bang for the buck, tree trimmers, gardeners, et cetera, et cetera. Thank you, Elizabeth. Do we have any other questions? This was really informative, right?
Yeah,
So
there's so many things that, I also learned tonight. Tammy had that great question about the claims, and who would have thought that what you just mentioned, 3 $1,000 claims is, would not, it's going to go against you versus just having 3,000, although the value amount is the same, right? That number of claims.
Yeah, it's crazy.
It's
Yeah.
crazy, and I don't think that's something that anyone would think of. They're thinking, well, it's a small claim, and then of course you're saying
No big
within
deal.
no big deal within the 5 years. I mean, that's really nothing. I mean, 5 years is a long time to have 3 small claims, right? For that to happen, and also a homeowner finds themselves, like you said, getting like the inability to renew. So that's something that I think a lot of people should be aware of, which is great. Thank you.
yeah, thank you.
My
Lots-
pleasure.
Yeah, lots of great information. We're gonna also, for everyone who joined, thank you so much for joining. We're gonna send the slides out. So they'll have a copy of the recording if they want to rewatch it. And they're gonna have the slides to revisit, and also your direct contact information and your teams, Terry, so they can reach out with any questions. And again, I mean, we're here to help, educate you. We're not just, like, we don't
Yeah.
just sell homes, same thing. We're here to really educate you, because owning a home is a big responsibility. And with that, we want to provide the best in the business. And Terry is obviously a master. That's why she's here at Masterclass. So
Yes,
thanks, Terry.
Thank you, Terry.
And
And-
real quick, we've got one more question in the chat from Uli. What are the current rates for an umbrella policy?
Okay.
So it depends on how much you have under the umbrella. It probably starts, I'm gonna guess around 400 or 500, 2 cars in one home. And it depends if you've got youthful drivers, it depends, and that's for a year. Depends on youthful drivers, it depends on additional vehicles, it depends upon driving record, rental properties, if you want to put all your properties under there, because we have people fall off balconies and all kinds of crazy things at rental properties. So all the things you add under the umbrella are going to raise the cost. But Paula will give you a quote. It's the only way to know for sure.
And Amanda said, thank you. It's been very informative. Thank you so much. So I also wanted to give a plug, because our next seminar that we have coming up in February, just a few weeks, Wednesday, February 8th, we're going to have our home buyer seminar. So it's buying your first home in, what the basically housing market update 2023. So anyone who comes is going to get a copy of the book, and there's already book members that we have that are going to be coming out. So that's Wednesday, February 8th
So
here
we
at
hope-
the office.
Yeah. So come, we want to see you.
At 6 p.m. and in person and Zoom as
Yes.
well.
Yes.
So thank you, Terry. Thanks, everybody. I know it's dinner time, so have a great night, and we hope to see you at the next one. Thank you.
Bye.